What is your view on PSU banks? Now, the government is trying to reform the financials part of it. They've already introduced certain banking reforms in the last round, and they did come up with an increase in the FDI limit first in the private space, and then in the there is talk about it happening in the PSU space, and there is also talk going on about the consolidation of these public sector banks. So, within the banking space, where do you think the juice really lies between the private sector banks and the public sector banks? What's your view on that space?
See, undoubtedly, the private sector banks have been far more efficient, innovative, and growth oriented as compared to the public sector banks. And that's not going to change in a hurry. But where the public sector banks come through is that they have a large depositor base. They have a large access to rural India's income flows. And finally, they can actually think long term and invest long term as compared to many of the private sector banks. So that's the opportunity. Finally, the reason why public sector banks are attractive is that the valuation differential is just too much to ignore. So, you can probably buy the public sector bank at still less than book value, whereas in many of the good private sector banks, you are forced to pay 2 times or greater than 2 times to buy the same bank. So that's one reason why public sector banks make sense to some extent. The second is that the reforms that the government is planning in the public sector banks of allowing consolidation, reducing the competition, and things of that sort is favorable for the entire banking industry as a whole.
So, what you're saying is one should look at both the private sector banks and the public sector banks at this point in time. If I'm to create a, but
Yeah, yes, and you have the alternates which are coming through, like you have mutual funds. We never had a listed mutual fund company for a long time, right? And today we have a mutual fund company which is trading greater than 1 lakh crores market cap. And we will now have many more come through as well. That's point two. So you'll have the entire financial services space will be lenders, borrowers, financial intermediaries, and then you'll have the saving products like insurance and mutual funds, and then you'll have the transactors like CDSL, NSDL, and the brokers. So the complexity of the financial services industry has become that much more, but the profit pool has also grown accordingly. So actually, banks have lagged in profit growth as compared to the other aspects of the financial services space. But be that as it may, it still forms a large portion of the profit pool.
okay. And given the fact that, I see one of the questions asked by one of our, participants here is what do you think will be the impact of the current interest rate scenario on the financial sector?
I think ultimately the competitive intensity will expand, and therefore the NIMs will be range bound, or there may be a little bit of downward pressure as corporate borrowing picks up. If, as and when corporate borrowing picks up, the spreads will come down, but the loan book growth will be that much faster. So I think it'll be the profit pool will grow because we are seeing a slowdown for almost 2 years in the bank books. And given that the shape of the banks, the quality of the banks, most of the NPLs of the NNPLs of the banking system is less than 50 basis points. I think there will be a pretty decent leg of growth ahead.
Okay, so how much of rate cut are you expecting, Satish?
I think rate cut is something which will have to be, kind of mapped along with what happens in the rest of the world. Don't forget that we can't be too aggressive on rate cut, given that we are having a slightly weaker currency. So I think the central bank has to measure all these aspects. We have benign inflation and lower growth on one side, but we also have a currency pressure and a current account deficit to map. So I think it will be very pragmatic, and one shouldn't get carried away in rate cuts per se. If it happens, it should happen by this year end, and maybe a 25 basis point kind of a thing is reasonable to expect.